Hello, this is the second edition of a new investment and trading approaches. I had promised you that I will talk about the tools I use for day trading, but that needs to be on a market hour. Today is a market holiday, so that gives me an, an opportunity to talk something which is equally important before we get into more details. So today I'm going to talk about the evolving philosophy of my own investment and trading. So let us go with our presentation. This investment and trading philosophy is something that cannot be completed in one session. So you can anticipate more sessions. I'll try to cover some important topics. The philosophy of our engagement is always very important, and the self-realization of that helps us to be more effective in what we are going to do. So what is the philosophy referred here? By philosophy, I mean the meaning we give to our activity or the journey, the values associated, the belief system, faith, knowledge, and wisdom framework. All that together become a philosophy, and clarity on that is very important. So, philosophy behind a journey tends to be very amorphous. It's not clear actually. It has a major role in shaping our journey. So we better learn about it because our outcomes are also influenced accordingly. A level of self-realization and grip is required for an investor trader to succeed better. As part of this, one needs to define the personal philosophy behind such a journey, and one needs to be aware of its dynamism, of change, transformation. Certain times there will be distractions. Sometimes you have to abandon your own philosophy for a short term, and there is always a negotiation, give and take. So that is important aspect of the sanity of an investor and trader. The purpose of this presentation is to acknowledge that I have awareness of such a philosophy for the self, which is actually evolving. It is not a standstill water. And my attempt here is to convince you to have similar awareness of your own journey ahead and a level of commitment to manage its dynamism ahead, so that your own philosophy as an investor trader evolves better. In our introductory session itself, we did cover some philosophical aspects without any headings, and we talked about the nature of this investment trading journey as an art form, like a dance, and we stressed upon the point that you need to do your own dance. Do not copy others, rather learn from others. There is a risk-reward ratio, the taxation issues, time value of money is a very important part to leverage and optimize. Understand and surrender to the market conditions, opportunities, and risks. Do not dictate to the market from your own whims. We already talked about all that. Then also we talked about the transformational aspect of an individual in a journey chosen, evolving from a nobody to a master, accommodate for learning, growth, transformation, manage the transformational burden too. Make it a journey with fun for self, while the objectives are also very important. So run it like a business while it remains a gaming engagement. Existentially enjoy the game, but outcome wise, it should be run like a business. There needs to be some level of rigor, discipline, and review. So better to master both this business journey and gaming journey together. We talked about all this. So let us talk further. Uh, you know, uh, elements. So understanding the nature of the game is very important before you start playing. And we admit that we cannot understand the game very well in one go. We learn as we go. So there is so much to learn about the game. Game cannot happen without the opposing forces. So any game, there is an opposing force, offense versus defense, batting versus bowling. So we need to honor both these opposing forces. Okay. A good game needs to leverage both the opposing forces So high reward needs to have accommodation for high risk. So it's always balancing the two opposing forces, you know, with which, the game happens. So identify these opposing forces in every context and dimension, including yourself. So a trade is actually a play of opposite. One wants to buy while a counterparty wants to sell, right? So you may wonder who is the idiot here. It could be both or nobody. So it's okay to assume that one can be an idiot in any transaction because you do it with the best of your understanding, belief, and faith, and it may turn out to be not the best decision later. So, but at the time of decision and action, you shouldn't worry too much about it, but be aware that it can be not the perfect choice or not the perfect execution. So that awareness needs to be there. While you win some games, you lose some. So there be a commitment to transform and grow across thousands and millions of games and innings. And this is something you keep on doing on a daily basis. So let there be a commitment to grow, while there will be, games on a daily basis, and there will be some errors, some success, some failures, like that. So from a sports analogy, the coaching in sports always teaches a player to start from a nobody to somebody. Only then you are recognized as a player and you are, admitted into the team. Then from somebody you have to become a winner so that the team can depend on a particular shot, particular wicket or particular, distinction. And from a winner to a champion, a champion is the one who repeatedly wins and also is confident of coming onto the top. And when a champion becomes a champion many times, such an individual or team can be considered as dynasty. And there may be something beyond dynasty also, but it's outside the scope of this discussion. So this kind of a growth should be there in your being and plans. So this commitment to this game can be for lifetime, and understand all the context of the game that is in play. It is a very complex situation. It's a very complex uh, set of choices. It's a complex way of engaging. The decisions can be complex. So understand all the context that goes into this game of investment and trading. Next point, investment and trading is a gamble. A gamble you manage best your abilities and focus. So you need to admit that this is a gambling engagement. Okay. So to admit and accept this investment trading as a gambling engagement, you need to be amoral. So if you are very moralistic and you're against gambling, maybe this is not the choice for you. Okay. So you gamble with your money, you gamble with your passion, spirit, time, focus, etc. Here, there is lot of uncertainties in the market. So it is a gambling expedition. But gambling per se need not be a negative quality, because life and living itself is a gamble. You drive a very safe car on a highway, and you are the great driver. You're wearing seat belts, and your car may be, safe for collision also. But some other idiot oncoming can hit your car. Let's say it could be a truck, and you can perish for the mistake you did not commit. So such risks are there. So in that way, that particular driving, journey would have been a gamble you have taken. And every day, whether we are aware or not, we take so many gambles in life. Okay, so gambling per se is not bad. So understand the level of gambling you commit and engage in this journey. That is important. Make sure that your beliefs, value systems, financial stability, risks you take, the rewards you aim, commitment to the game you need to play, are all well aligned with the gambling aspect here. Managing yourself against the gambling addiction is the burden you carry. See, once we admit it's a gambling, this gambling can become addictive. Okay, so we can manage that. We need to be aware of that and manage that. So this is a burden you need to manage yourself. There is nobody to help you on this. So we already know that excessive pain leads to some trauma, which in turn results in fear, withdrawal, and negative behavior. Excessive excitement and pleasure can lead to addiction. So either way, there is a limit to good things and bad things in your life experience. Otherwise, both can leave a level of residue which can bother you and slow you down or get you against best possible results in your efforts. So you need to be aware of that. So you need to be aware of your trauma and addictions in general, and also in the game of investment and gaming. Constantly work on them, avoid too much trauma and pleasure and excitement, So manage that. Accept self as an idiot with possibilities at both sides, upward as well as downward. Okay. You're not, everybody can be considered as, God's avatar, incarnation in this. But as much such in an infinite, attribution is possible, it's also possible to attribute one as imperfect. And I call that as an idiot. Got it, no? Nobody is perfect. So put your unsure foot forward with the best possible faith, prudence, attention, awareness, focus, commitment, engagement, efforts, and harvesting the rewards. The focus is the intended outcome or something better than that. It's not about, your own valuation as a self. Okay, so keep yourself light here. Okay, it is a lifelong gambling expedition you take. So do not rush like a rabbit and slip off in the middle. Win like the boring tortoise and keep going. That is the mindset one should bring into the game. Now, let us talk about success. See, we all have tendency to look for shortcut to the success, but actually there is no shortcut to success. Okay. In fact, many of us might have chosen this investment and trading as a shortcut to become financially successful or whatever, which is okay. So we can come with whatever romantic notion we have, but the reality is that in order to succeed in any journey, there is no shortcut. You have to put the effort. You have to, uh, progress in the journey. You have to face whatever comes by. You have to survive and then succeed. So whatever romantic aspirations are there and dreams are there, you have to come to the reality and face the reality and then succeed. Therefore, consider this journey only if it suits you, only if you like playing it, and manage self better playing it all along. Got it? Do not come in with half commitment and as a shortcut to something, and you can get away with murder kind of attitude. Evolve your own journey or the dance form and playing style over a period. Learn from all sources all along, but do not copy with a sense of dependence. Never entrust your money to an outsider agency as a shortcut. See, a lot of newcomers, once they come in, they look for shortcuts. Okay, maybe I can pay someone who will manage my money and do wonderful, because that fellow is, promising to double the money in a week or double the money in a month. That kind of offers are always there in the market, and they are usually a setup to cheat you or misguide you and basically take you faster into the ruins. So be aware of that. So never sign up to pay a commission to an outsider upon your own success. There are a lot of offers. I will give you, F&O recommendations. So then if it succeeds, I will take 10 to 30% of the commission, and I will pass you that 70 to 90%. And in order to do that, you have to give the person your own money. That person will play with your money. You will lose all your money. over a period, because there are only cheats who dominate this game, and a reasonable guy who plays this game will not survive there. So do not get attracted to such scams out there. Focus on what you can earn on your own journey, your own capability, your own understanding, your own efforts. That is very important. Always remember, shit happens all the time. As an individual, you go through the shit every day, right? So our attraction to any journey could be due to its romantic aspects, but you need to recognize that all journeys are associated with some kind of shit, and you need to accept that shit. You have to be comfortable with it. You have to manage it to minimize its burden or pain. So if you don't manage your own shit, then it becomes more complex. There is a saying now, then the shit can hit the fan. Got it, no? You don't want to get into that kind of an extent. So you learn to manage your shit very well. So the shit can bring you some trauma. So you manage it so that the trauma of the shit is minimized. Okay. Market always causes some shitty situations. Okay. So you just manage it. Once you master your shit management, only then you get to manage your opportunities and lucks better. So until you learn to manage your shit better, which will take some time for probably, you move around wearing an adult diaper. Okay, so that the shit doesn't become a trauma for you. Know your diapers and sign up for them with no shame. And it's okay to show off them too. See, look, I am wearing this diaper. What is your diaper? Got it, huh? In the early part of the journey, be dependent on the diaper if you need to, but manage your shit. Typical shit happens in this journey is your own greed and fear psychology. That is always there. Your greed inspires you to get into a trade or an investment. Your fear can stop you from doing the right thing, or your fear can protect you from getting into a loss. So fear can work either way. So there can be a gap between your aspiration and ability and engagement. So that ends up becoming a shit. Negative surprises in the market is definitely a shitty situation. There can be manipulations in the market, misinformation in the market, misleading propaganda will be there, self-serving, cheats, enticing, damage of rumor mill and gossips can be there. Got it, no? Someone may come and say, hey, I know this company, my cousin is working there. This company will, double its stock price in next 3 months. It is just a gossip. Got it, no? Limitations of professional advice you seek. Though you are engaging a particular professional who may be giving a free advice like an idiot like me, or for a fee, that person also has limitations and blind sides. So especially when such people, you know, approach you with a mindset of I know better, you know nothing, that kind of arrogance is a good sign that probably you are getting trapped. So that is another shit you have to manage. Your losses in the market is definitely a big shit you have to manage. Your margin calls, if you leverage and, you know, then suddenly they pile up, and the agency that gave you that loan, which is the broker, will sell all your holdings, and, instead of losing some 10 to 20%, if you had played with your own money, by being margined out, you may lose something like 50 to 80%. So or even 100%. Sometimes it's not only 100%. Even the broker says, look, you have to bring more money to cover the losses. So that's the biggest shit to manage. Your life priorities outside the game, hijacking your commitment here, or the time, attention, resources away from this game is a shit you have to manage. So that can happen time to time. Next one is managing your risk and reward equation all the time. At any given time, it's the two opposites, risk and reward in play. So you understand your risk and rewards. Therefore, take only those bets where the promised reward is more than risk, at least to the tune of double. You have to manage them all the time. Own your mistakes. You do make mistakes. Do not blame anyone, including self, on such mistakes. Contain your risk when risk events occur. Do not become a deer caught in the headlight. This is a mistake I had also done initially. Let's say you get into a trade and suddenly that company, some bad news comes, the entire, stock becomes half overnight. Now, you can simply hide your disappointment and failure and just ignore that trade. And by ignoring that trade, maybe it become 5% or zero over a period. Maybe you had a chance to save your 50%. So you need some kind of a prudence and uh, to make that judgment when such mistakes happen, so that you can protect your losses and move forward. You maximize profits and minimize losses in alignment with your resources and time value of money, right? So, so when hits the fan, you need to make a proper judgment and cut your losses and move on. Okay. So that kind of mindset is very important. So don't make anything personal, that you have to prove to others that you are always succeeding or including yourself. Got it, no? So be very realistic, therefore, and make a judgment call or a decisioning based on what is right now is the right thing to do, not what you thought and what it is now. You don't hang on to your past decision. I invested in this because I had promised that it will become 3 times in a year or something. Now I have to prove it right. That kind of complications don't get into. Your risk reward equation is dynamic because market is dynamic. Your resource engagement is dynamic. Your progress is dynamic. Your transformation is dynamic. So many things going on. So everything being dynamic, you also need to be dynamic. So you do the dance being very light. So don't carry your own baggages is the message here. Okay, next point. See, there are two things that happens. At one end, you have to focus on the game. Other end, as a player, you have to keep improving yourself. So, and as a player, you transform, your games also change. So there is a sense of tuning and adjusting all the time. Got it, no? So you cannot stay static and you cannot, I will stay the same and I want to succeed. That is not possible. So you should be open to sense all the changes that is happening, sense the changes that needs to happen in you, and you need to commit to the changes you need to make to do better in the market. So your commitment to play better or dance better, if it's a dancing analogy, needs to be permanent out there. Never take it easy on this while you may be off from your play for a while. Sometimes you may have to be off from your game, but your commitment should remain there, that I'll come back and I'll improve. Okay. Have a roadmap of self-improvement in your playing. There needs to be a learning roadmap. There needs to be a training roadmap. Ongoing learning rigor and plan should be there in your daily plans or weekly plans. Participation in a community of such learners for companionship, sharing information, insight, inspirations, and event guidance. Look for the WhatsApp community, which is very effective. In fact, I am planning to share my own WhatsApp community in the comments later. Daily and regular lifestyle alignment needs to be there to play better as well as to improve your game as you go. Always be engaged with the self-esteem of a professional or a business person. Have room to make mistakes and survive. Learn from mistakes. You cannot avoid mistakes. Please remember that. If you focus on avoiding mistakes, your game will be horrible. Like in a T20 game, T20 cricket game, you need to attempt sixers once in a while. Okay. But in cricket, you should attempt sixers on a ball that deserves to be sent to sixer. Right? And you need to be aware of the pitch condition, of course, the ball quality, and your own form to hit that sixer. No, you cannot come to play and attempt a sixer in the very first ball you face and then become out. You need to settle down. So you still go with all yours and attempt the sixer, but it may come short because of the wind or something, or the nature of the bowling or whatever, or you might have hit from a side of a bat or something. So you may be caught in a boundary situation, you know, or you may be bowled. Basically, you can become out too, or that boundary attempt may fail and you may just get one run. Got it, no? So there needs to be your resolve, there needs to be your focus and attempt, but the results can be something different. That should not stop you from playing your game the best. So your style of playing is very dynamic, therefore. Your readiness for the game needs to be there all the time, physically, mentally, emotionally, and spiritually. Next point, market is your partner in this journey. You are playing in the market. It is market and you. Got it, no? So you are trying to exploit the market for your gains. But market can punish you also with certain uncertainties and certain events. So you love and devote your partner, which is the market here. So you have to surrender to the market condition and be one with it. For that, you need to have a good understanding of that. So you need to be aware of the opportunities and the risks in the market at any given time, and this opportunity and risks, they vary on different time frame. Got it, no? So your game can be for a minute and it can go all the way to couple of years or sometimes even a decade. So you need to manage in such context. So that also brings some dynamism in you. Knowing the market needs grip on the following aspects. You need to have a good understanding of economy, how the policies will influence this economy, political equations that brings stability of governance and coalitions and agreements, business conditions and cycles, you know, all this influence, and all this will influence at the level of global, national, local level, business sector level, business company level. So you need to have that grip in multi-dimensional like this. You need to have a grip on the playing field. So your playing field involves your broker, the app you use, the instruments you invest for investing or trading, like index, ETF, stock, commodity, derivative, etc. Grip in your on your trading setup also is important. You may be using your phone or a laptop. You may even olden days we used to call in uh, to place the orders. Tools to sense the opportunities. Tools for fundamental and technical analysis. Your daily homework before market opens and after market closes is important. You need to review the day before the market opens, and you should review the day after market closes. What was your intention? What was your anticipation? What actually happened? What went well? What didn't go well? What is the learning? What is the focus therefore for the next session? You can do it intuitively. It may hardly take 1 or 2 minutes, but that kind of reflection is very important, both before market opens and closes. Sensing a sense of continuity in the market is important. Market starts, let's say in the morning, it ends in the evening, right, or afternoon, then it opens next day. But though there is a break, market actually operates on a continuous basis in terms of its existence, right? So you need to kind of balance between the actual operational discontinuity and the business continuity that is there out there. So, for example, there may be a business development or a political development or an economic development that may happen in the evening that can have an impact next day. In that sense, market is continuous, contiguous. So the breaks you take between the trading hours also has an impact on the market. So therefore, there is a more burden of focus and attention at market open and market closes, because there was a break At market open, all that needs to be caught up. And at the market close, there will be a break. So certain things need to be done so that there is a break coming, So that psychology and impact you need to understand. Have a clear distinctions between business value, growth projection, valuation influencers, current valuation, predicted valuation by time, potential versus kinetic play in the market, speculations, manipulations, breakouts, disaster events, supply-demand equations and associated cycles, certain propaganda that misleads, and of course, always there will be chaos. You have to thrive in this chaos. That is important. So you have to make sense among all the chaos and noises. You have to focus on what is useful, what makes sense, and then do your best, knowing very well that you may not know everything, and you may not have complete grip on the situation, and therefore you manage your risk associated with too. So that kind of a mindset you have to come in. Now, this is an important aspect of investment and trading is you are here to exploit the momentum and a trend that develops around that momentum. So what is momentum here? Momentum is basically the price action into volume. So let's say we'll talk about a script. Let's say in one market session, let's say the price went up by 5%. Okay. And with what volume it went up. So if you can get a grasp of how the price has moved. See, price can move positive or negative. Price can move very fast or gradually. And price can move with what kind of volume of trade involved, right? So if a price moves significantly with significant volume, then it is more of a consistency of a trend. And a trend may start, it may continue, it may wobble, it may wax and wane, and it may even end, So you need to get a sense of all that. That is very important. Okay. So you need to sense a trend, and you have to sense the momentum within that trend, and therefore the window of opportunity for you to exploit within that. So this trend happens on a time axis, right? So anticipate overextension, fatigue, timeouts, restart, range, trigger, all these are associated with the trend. A trend may overextend, therefore it may fizzle out because there is a fatigue that will settle if it overextends, right? And a trend may continue, but it may take timeouts in between because finally trend to continue, there has to be a series of buy and sell transactions. So buy and sell transactions happen only if there is a money to transact, right? For example, let's say we have a lot of goods stocks in the market. Suddenly a series of super duper IPOs come into the market. That is a primary market. So people want money to invest in that, right? Both institutions and individuals. So what happens? They don't have the money kept aside. So they will sell some stocks, make that money and keep it aside, right? So even a trendy stock may slow down because people have to go for some cash. So they may have to sell even a good stock which is in a trend. So that's why there can be timeouts in the trends. And a stock that is in a trend may end the trend, and again the trend can restart. This can happen in any time interval. For example, a good blue chip company doing very well may give one bad or bad quarterly result or a result which is below the expectation. So then it will correct out of disappointment or something. But next quarter can be again a better quarter, and again the trend will start. Okay. So you need to understand all that. So there can be a range, therefore, a trend may define a range of price action. So that you should be able to sense it. Then there are certain trigger events, a trigger event can be a political situation. It could be a quarterly result. It could be, a Fed decision about liquidity of the money, various things. Or it could be some remote thing. See, sometimes trend happens even for stupid reasons. Let's say there is an AI stock which has got an attention, and it is so attracting a lot of investment, let's say. So the market is such that if there is a company name or a script name which sounds like an AI stock, people will just invest, you know, just for the namesake, you know. Such stupidity also happens in the market. So you need to recognize when a trend breaks out or a momentum builds up, you need to understand why it is happening. Is it because of some kind of a rumor? If it is because of some kind of mass hysteria, is it because of potential coming into kinetic force? All that you need to, or it is some kind of a total manipulation by a set of traders. That also can happen. Master the factors that influence both the momentum and trend. That's important. Master fundamental analysis to predict momentum and trend events ahead and the value associated. So the fundamental analysis gives you a grip on the potential for momentum and trend. Then master technical analysis to assess the momentum and trend in play and your bet as to how long it can last and how well. So this is the kinetic aspect. So you need to have grip on both potential aspect and kinetic aspect of how the price actions move with what volume, establishing a trend, and therefore opportunities for leveraging rewards or the risk events or risk windows where you can have losses. Next point, master exploiting the valuation. See, the earlier one was more of a kinetic aspect. Now we have to exploit the valuation. Now, when you say valuation, there are different types of valuation. There can be an intrinsic valuation of a company. There are financial models which can calculate the, enterprise value, and this is what it is worth. All that models are there. But market goes by its own equation. So in the market, the current valuation of the company may not be aligned with the intrinsic valuation. And then there will be projection of the valuation. This projection could be based on various factors like the business cycle of that company's business, company management, the policies which may favor or not favor, global economic conditions, the investment interest from various investors for that particular sector or a company. Like that, there will be two dozen such factors are there. So based on that, there will be even some attempt to project the valuation. This company can become double in the next 1 year, something like that, right? So you need to be aware of all that. Perceived valuation due to supply demand, brand history, public opinion influencers, including rating agency, like a rating agency will say that I have upgraded this particular company, from underperform to buy, So suddenly there is a renewed investor interest and the stock goes 5%, 10% in the next session. Media can come with its own influences. There can be mass hysteria, liquidity, future projections, political stability, all this matters. The gap between intrinsic valuation, current valuation, and valuation projection always in play, dictating momentum and trends. So you have to go with both potential aspect and the kinetic aspect, valuation as a potential aspect, and momentum and a trend as a kinetic aspect. So within this, you optimize, find out opportunities, and make your money. Master the investment and trading strategy, So you need to have an approach and that needs a strategy. So based on your grip on both the kinetic and potential, you have to come up with a strategy that works for you. Based on different playout scenarios as to how the kinetic and potential play with each other, based on the timeline, event horizons, uncertainties, certainties that emerge, right? For example, recently, exit polls gave a rosy picture. The market went almost by 5%. Next day, the exit polls were a bit proven wrong. There was a stable government, but with a coalition. But as that happens, uh, markets corrected worse than the appreciation previous day. Then the third day, markets recognized, okay, we have a same continuation of the government and policies. Then markets improved further, bridging the gap that was there between the previous days, day one's appreciation and day two's, you know, losses. So all this happens. Okay. So you have to ride on that and exploit it. Exploit the gaps and arbitrage that occurs across all these gaps on different timelines and investment trading channels. So this is where, when there is a mass hysteria, you know that it is going to end one day. So you may take a particular, point of time and bet against the mass and benefit later. You won't get instant gratification on prudent decisions. And seeking instant gratification may turn out to be a very not so prudent decision. Next point, optimize within the uncertainties and imperfections. Got it, no? You will never know perfectly what you need to know. Okay, and always the reality is uncertain. So opportunities and risks come together. So, and there are various such opportunities and risks, but you can only do little with your itty bitty money you have. So you have to be very prudent and do your best with what little money you have. You are an imperfect being playing in an imperfect pitch, an imperfect game with the variable and unlimited risks and rewards. So that could be very unsettling. So you have to, have a grip. Increase your tolerance for imperfections and setbacks. Increase your readiness to exploit opportunities. Breakouts and sheer good luck sometimes happens. You have a stock and you're thinking that it's good. Maybe next quarterly result is good, so I'm going to wait for next 1 month or something. But some news comes next day, because of which the stock may hit 10%, 15% rise over a day. So that is a stroke of good luck. You enjoy that. Take it easy at the end of the day, only to play better, hopefully, next day. Take a break to focus on your rest of the life priorities also. See, you are not doing only this investment and trading. It is just a part of your life, daily life, or overall your life plan. So make sure that this does not distract you too much from other priorities of life. Balance your life, with this focus also. So you need break, so it is good that the markets close after a period. Imagine the markets are open 24/7 basis. I think it will cause a lot of mental issues, I think, fatigue, health issues. So maybe it is a good reason. It is good that markets are not open on a 24/7 basis. Celebrate the EDSC all around, self included. Don't become defensive for your own idioticness or others. Stay light, but take on heavy. That is the focus. So hope this gives you a clarity as to what kind of philosophy you need to develop, what kind of mindset you have to be ready with. There is more to discuss, but I think this is enough for now. So I may have one or more such sessions to extend this philosophy discussion. As promised, this coming week, I would plan to have an online session when the market is open, but it's not going to be interactive. It will be just pre-recorded and will be shared with you. So that primarily is to focus on the tools I use. The actual investment trading techniques is a huge discussion. Eventually, I'll get there. Okay. But the focus you need to have is grip on fundamental analysis and technical analysis. I did attempt one or two sessions and they are there in my playlist of YouTube, but I don't think I have covered all the topics there. I have just scratched the topic because it's a massive discussion and I don't have enough time to do justice. So gradually I'll do it. So don't wait for me. You have your own learning roadmap on fundamental analysis and technical analysis. You're most welcome to go through such sessions I have already conducted, which are available in my playlist. So that brings to the end of today's session. I hope this helps you in some manner, and you can stay in touch with me on one of these social network platforms. I will also share the WhatsApp community I run with the fellow traders and investors, who have some faith in my, companionship with me. So it is a peer group where we discuss various, events, various success, failure situations, risks, opportunities, etc. You are most welcome to join. You may anticipate that link information in the comments to this video when I post. Thank you so much. Have a good one. See you soon.